Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. And we're starting with euro-dollar pair with Din Lao. On Thursday, the EURUSD pair rebounded from the 76% Fibonacci corrective level at 1.1338. Turned in favor of the US dollar and fell below the support zone of 1.1240 and 1265. A rebound from the zone from below today would signal a continuation of the decline toward 1.1182 and 1.1074. Conversely, a consolidation above 1.1265 would support the area and resume growth toward the 76 Fibonacci level at 1.1338. The wave structure on the hourly chart has changed. The last completed upward wave failed to break the previous high, while the last downward wave broke the previous low. This suggests a potential trend shift to a bearish one. Recent waves have been weak and shallow, indicating low trader activity. There hasn't been much news from the White House. Traders are waiting results from trade agreement negotiations. Nevertheless, the dollar has started to recover. On the 4-hour chart, the pair dropped to 100 Fibonacci corrective level at 1.1213. A rebound from this level will favor the euro and a rise toward 127% level at 1.1495. A break below 1213 combined with a move below the trend line would increase the chances of further decline toward the 76 level at 1.0969. No divergent signals are currently observed on any indicator. Here is Laurie Bailey with pound sterling dollar pair forecast. Let's have a look. Yesterday, the Bank of England cut its interest rate by a quarter point, with only 7 members of the committee voting in favor of the decision, contrary to the consensus forecast that all 9 would support it unanimously. As we anticipated in yesterday's analysis, the market was not prepared for the rate cut. As a result, the pound declined by 46 pips by the end of the day. Currently, the price is testing the target range of 1.3184-3208. A break below the lower boundary allows further decline toward the target level of 1.3101. The intersection of the MACD line, it's a blue line on the graphic, and the 1.3101 support is expected on Wednesday, May 14, which could become a potential turning point. On the 4-hour chart, there are still no signs of a reversal. However, if the price fails to break through the 1.3184-3208, it must rise above the 3311 level and the MACD line to confirm a reliable reversal. This will also require time, potentially resulting in sideways movement in the meantime. That's all for today. Wish you best of luck.